Hey guys, so initially this video was going to be the start of my share market investing journey, but when I started to do all the opportunity cost and the return on investment numbers in my head, I realized that maybe investing isn't for me right now. And so I decided to contact my better half, who knows a lot more about investing, so that we can discuss investing in your own business versus investing in the stock market. Connor, how you doing?
Oh, very good. What an introduction. Your better half. I'm gonna hold that against you.
Now, before we get started, Connor, it's probably important to say that when it comes to these two things, there really isn't any correct answer. It's almost like choosing between chocolate ice cream or vanilla ice cream. And it really all depends on your preferences, your personal skill, your level of knowledge, and your own resources. And also smashing that like button for the YouTube algorithm.
Yeah, I like how you threw that in there. Very Graham Stephan-esque. But no, seriously, guys, if this is something that you would find value of, or you've even had to think about yourself, leave it down before we go through our reasoning and sort of the characteristics that we would take into account with making this sort of decision. Let us know what your sort of gut reaction is, whether, you know, with the profits from your business or from your job or whatever, would you prefer to, or should you reinvest them back into your own business or start putting them into the share market? I know Alan and I would really find it interesting to see where people stand, you know, at this point in time before we've discussed some of the characteristics. So be sure to put that down. And I know I know a lot of our other viewers would appreciate that as well. Now, with that out of the way, I just want to quickly go back to something that Alan said in the beginning, which I think is really important. So obviously with this type of discussion or these decisions, it's not the be all and end all. Once you make a decision on, you know, at this point in time, whether or not you feel like you want to reinvest in your business, I should say, or invest in the share market, that's probably not going to be the case forever because things change dramatically, in fact. So I think it's really important to really hone in on what Alan said. These sort of considerations need to be taken into account with the current resources, your preferences, things like that. And bear in mind, some of the points that we mentioned mightn't be equal weighting. So for example, you may find just one point on the side of reinvesting in your business that outweighs everything on the invest in the share market side, and vice versa. So we're just going to go through the things that we have had to consider owning our own businesses and obviously having a keen interest in investing, and hopefully it provides some value to you as well.
Yeah, just another disclaimer before we move on, Connor. I think it's good to mention that we're actually only comparing investing in the business to your personal strategy in investing in the stock market. Now, for the people that want to check that out, I will put the link of the video right here on this card, and I'll link in the description as well. Now, moving on from that, for me personally, I think the best way to start with this is to talk about the time that it takes to invest in your business and to also invest in the stock market, because I don't know about you, Connor, but I feel like it's probably the biggest one that differentiates the two for me, and makes one of them very active income and the other one very passive income.
Yeah, that's right. Like that definitely is the first consideration. So as Alan said, we're not talking about, when we say investing, we're not talking about share trading or, you know, investing in real estate, flipping houses and things like that do take a lot of time. We're talking about a very passive strategy, just dollar cost averaging an index fund. So it takes barely any time. And when you compare that to reinvesting in your business, which may involve, you know, adding in a new stream or a new operation in the business, it will, in most cases, require a lot of active work towards it. So when we're talking about, you know, what's the return on investment, you have to take into account that when you're investing in the share market, you do almost no work to get that return. And when you compare that to, you know, potentially having a new offering or a new service, which you may do when you reinvest in your business, that will, in most cases, require some additional time or effort or whatever to go into that. So that's one thing to keep in mind.
Yeah, I think a point that falls under time-wise is the fact that for someone, their business, you know, might be their livelihood. So I feel like it's fair to say that everyone, needs to have an active income. So needs to have a job where they make money to survive, right? I feel like that applies to everyone.
Definitely.
And that's, the sort of weigh up pros and cons with investing in your business and investing in the stock market because for a lot of people, they might need to invest in their business because they don't have that excess amount to start putting their eggs in different baskets like the stock market because they need to focus on maybe growing their income first. And for them, it might be their own business.
Yeah, no, I mean, yeah, that also brings us on to another consideration. I mean, they're all obviously tied in close. So I'll put a pin in it. Alan, remind me, we have to go back to how with this sort of market strategy, particularly when you're starting out, which is kind of sort of what we're going for in this. We're not talking about, someone who's been investing in the share market for years and is wanting to continue adding to their share portfolio versus, reinvesting in their business. We're talking about people in our situation. They're just starting out. Should they put the little amount of profit or extra money they have at the end of the month towards the share market or towards their business? And so what I'm going to talk about is how long it may be before you see returns. So we'll come back to that. But I think just to close out this time, conversation, this time point where, the reinvesting in the share market or reinvesting in your business, we have to mention that, we did mention that with it reinvesting in your business, a lot of the time it may mean more work. But there is a case when reinvesting in your business actually gives you more time. And that's in reinvesting in efficiencies. So whether you're investing extra money to hire someone to do some of the work. If we take this YouTube channel as an example, there may be a point where we reinvest in this YouTube channel by hiring an editor or commissioning an editor to do some of our videos, which is extra money that's going in, which actually lessens the amount of work that we have to do. So that's one thing to keep in mind. It's not always reinvesting in your business means more time that you have to put towards, the business and ultimately less time you have to do other things. It can actually give you time by reinvesting in the business. So that's something to keep in mind. I think we can both agree that in most cases, it's going to be adding additional work, but there are cases when you're investing for efficiencies, which, in most cases are once you're, a little bit further on, particularly in the beginning, it'll be adding work, but just something to mention.
Yeah, I completely agree with that, Connor. I think another point that's separate from time, but it's pretty close towards it, and it's pretty much linked up with it, would be the ROI. So the return on investment within time that you have with your business or investing in the stock market. Now, in particular, the situation that we're sort of basing the stock market on is yours, which has a lot of pros. It's very safe. So kind of, compared to a business, it's, business is a very high risk but high reward, whereas this sort of stock market is very safe. And the reward is pretty good, but over a span of 40-ish years, right? So
that's right.
Maybe that's something we can go into, like the return on investment of, making money today or in the next 5-10 years, potentially high reward, or focusing on the safe side and making a lot in 40 years.
Exactly. I mean, that sums it up perfectly. With the return on investment, it's not so much, a matter of this investment will bring more than this investment. It really is a matter of the unknown. So with investing in the stock market, with the strategy that we're discussing here, which is just dollar cost averaging an index fund, although it's not guaranteed, no investment is guaranteed, whether in a business or in shares or bonds or real estate or whatever. Although it's not guaranteed, it is safer than most, you could say, and particularly over a long time span. So if we're talking about that, we can say, okay, well, if you're doing an index fund, say the S&P 500, it roughly gets 10 or 8 to 10 to 11% per year. And in the beginning, we don't have that much. That really isn't gaining much. I mean, if you have $100, that's $10. So if you assume 10%, but over a long period of time, as the amount grows, then the returns become more and more impressive as a dollar amount, but the percentage return doesn't change. If you then compare that to reinvesting in your business, although you can't really tell how much it's going to be, and it is inherently more risky, there is a much greater return. There are certain strategies that you can take where, you'll invest and then you'll lose all your money in your business. You try a certain service or a type of product, or you put some money towards ads and you get no results from it. That's just part of what happens. But conversely, compared to the share market, there are certain strategies that you can take where within the first year or the first couple of months, you already 10x your investment. So that is a very different scenario when you compare that to how stable and sort of boring investing like we're talking about can be.
Yeah, and it definitely falls under, your personal preferences and your own personal situation. Because I feel like with my current business, I'd probably be getting more for my money to keep reinvesting in it than I would in the stock market. But there is also cases where people start businesses and, they don't actually make enough money to actually compete with the stock market. So it really all does fall between personal situations. And for a lot of people, it probably would be good to diversify.
Yes, and that's a perfect point. That brings us on to the sort of the next main consideration, or one that we're going to mention in the video, is diversification. So, a positive, you could say, for investing some of your profits or some of the money you have laying around in the share market, separating it from your business, is the fact that it's diversified. There are certain people that their entire net worth, their entire income is tied up in a business, and if that were to go under, God forbid, then that would be their livelihood gone. But compared to if you had a portion of it in the stock market or whatnot. Now, one thing that I recently came across, I didn't really think about initially, is that, technically in those scenarios, when you are reinvesting in your business, you can also diversify in a way as well. So, for example, you may have a YouTube channel is another perfect example. I'll use that one again. So we have, for example, with the YouTube channel, one of the main revenues for most YouTube channel is ad revenue. YouTube paying you for, or your advertisers paying YouTube, and then YouTube giving you a cut of the ads that play on your video.
Which we still have not seen anything of.
That's right. Exactly. Nothing yet. But soon, hopefully. So that's one thing to keep in mind. But you can also diversify within that business model by offering referral programs and affiliate commissions and doing paid promotion videos and all of those sorts of things.
Merch sales.
You could even on the outside, merch sales, you could have a Patreon, all of these different revenue streams around the one business, where if for whatever reason YouTube ad revenue goes down, there's a change in the prescriptions or whatever, or something happens with the advertisers that are putting things in your video, that won't necessarily mean the end of that business, because you would still have these other revenue streams in place. And so that's sort of something to consider. Obviously, you're not as diversified as being invested in the share market, but that's definitely something to consider. It's not a matter of everything you reinvest in your business is going into the one revenue stream, and that could end at the drop of a hat, which it could, but you do have a little bit of resistance in most cases when you have set up multiple revenue streams, which reinvesting can allow you to do. Yeah.
Another stem from diversification is probably everyone's individual resources when it comes to money. And like I mentioned before, everyone needs to have an active income and work. And I think when we're targeting the sort of broader audience, not everyone will have the funds to actually be able to invest in the stock market and have their money tied up for, X amount of years. And it might even be better to actually just keep reinvesting in their business or whatever they're doing to eventually, in the next 3, 5, 10 years, whatever, be able to have that extra income to be able to invest in the stock market.
I think that's a good point. The only thing that I would that I would like to add to that as well is when you think about, obviously, opportunity cost is a huge thing, because with this hypothetical example where we're saying that, let's assume for the purposes of the argument that you do have a little bit of extra income. Say, in my case, say you have $300 extra a month. Should you be putting that, could you be putting that towards your business, reinvesting for whatever it is? Or should you be opening up a share trading account and then starting some sort of investment on the side as well? And so if you have that scenario in mind, I think it's important to think about as well. Obviously, we've spoken about the opportunity cost of I suppose we haven't really. I mean, obviously, the best scenario is to be able to do both. I think most people can agree that to a degree you should have investments outside of your main business and a lot of different things going on. But let's say that you can't. You have to choose one or the other. Then the thing you have to keep in mind that would also help in any situation, in any decision you have to make, is opportunity cost. So for those of you who don't know what opportunity cost is, it's if I take one route, what is the cost of taking that route in, for example, like lost revenue in other ways? So to break it down even further, say you were to invest in your business, what are you missing out on by not investing in the share market? So, and vice versa, if you invest in the share market, what are you missing out on if you don't invest in your business? So that's something to keep in mind. And one thing that is particularly unique to this type of investing that we're talking about here, the dollar cost averaging in an index fund, is you do see the very impressive returns once you've been invested over a longer period of time. I mean, they've done all of these calculations that show, assuming you can only add in a certain amount, although in the beginning you may make a certain amount. I mean, Alan may put up some calculations here. Say, you start in investing $200 a month. In the first 30 years, you'll make however much it is. But then in only the following 10 years, in that period, you almost double your money in only a quarter of the time. I think that's roughly how it works out. So that just goes to show that extra 10-year head start really does have a lot of cost in the end. So that's one thing to keep in mind with the share. That's unique to the share market opportunity. And so if you're not doing that and you're investing in your business, you've got to think, okay, well, if I'm delaying going into the share market, assuming eventually I do want to get into some other type of investing, can I make up that loss that I'm going to incur if I don't start now with the rewards I reap from the opportunity I took with investing in my business first? So that's just one thing to keep in mind.
Yeah, and with our particular scenario, $300 a month equates to $3,600 a year. So in particular, it's, how much can you do with that money versus putting it away for X amount of years? And then it just gets really complicated, because then you go, well, what if we take that amount, and do 5-10 years? How much can you do with that money in your business? And then that's where it gets a bit heavy. And that's why I think that it really depends on your financial situation and whether you can afford to invest in the stock market. Because if you can't really invest in the stock market, and if you're someone, like us, or, me, that you might be in your 20s, and 3,600 is still probably a lot of money to you. So to put that away and just not see it for years on end, it might be pretty crucial to you. So it really does depend on preferences and your current situation. Exactly. And then you've also got to think about at the end of the day, like you said, it's so case specific, but the purpose, as we have already said for this video, is just to give you points to think about. Something else to consider would be with regards to the share investing. If you take the approach of not starting or starting later,
obviously the benefits of doing this strategy is that it is so certain, like not certain, but it's, you know, much more safe, you could say, than developing some sort of reinvestment service for your business, for example. And so if you're thinking, okay, well then what am I going to be doing in retirement? Like, can I really expect that all of this money that I put into the business is going to be bringing me income at the end of the day? You know, with a share market portfolio, you can say, okay, with a degree of accuracy, I know roughly that's going to equate to this. But what am I potentially missing out on if I invest in the business? And vice versa, if I invest in the business and don't invest in the share market, what am I risking at the end of the day? Because obviously you want to be comfortable in both scenarios. So I think, you know, with this goes with all sort of money management. You need to, I am a big believer in keeping your options open and having lots of things going at the same time, because you can't just all ride on one thing coming through. So if you are able to mix it all up and limit the cost of taking one opportunity over the other, in effectively having little pieces of all, I think that's I'm sort of leaning towards that as being the best way forward. But like we said, also way back in the beginning, it is a case-by-case basis, and things change as you go through your life as well. It's not like right now you have to decide that you're not going to invest ever, or you're never going to reinvest in your business. Everything you make from your business that you're going to put into whatever it is, the share market. It's something that you'll constantly be evaluating as you move forward. And all these points that we spoke about, hopefully will help you make a better decision.
Well, yeah, I'm pretty sure we covered pretty much everything. Would you agree, Connor?
Yeah, I think like I said, hopefully our decision making, Alan and I have had countless conversations about this. You know, we're always thinking, you know, what's going to be best for the future. You know, are these investment strategies that we're thinking about, are they actually going to work? How the business is going to go? So this is just sort of like a look into the conversation that we have, and hopefully, you know, we've brought up points that you guys hadn't thought about, that'll help you ultimately at the end.
Yeah, definitely. Well, if you guys like this video, don't forget to subscribe and leave a like and a comment down below on what you thought. Also, here's a video that YouTube thinks you'll like, and here is our last video.